I also mentioned that somebody was listening and wanted to call in. It's Mohammed Erian, who we wanted to welcome on our program today because you were listening. It's great to talk to you, by the way. You were listening to our discussion at the top of the program regarding what the Fed is likely to do, what it might mean for stocks. And what do you want to share with our viewers on what your current view is?
Thanks, Scott. Look, I really liked what Josh and others were saying about what the Fed should do. The data, the commentary all points to higher for longer. So I don't have any issue with that. It really is what the Fed will do, and this Fed in particular. What will it do? Remember, the chair's comments have always been hawkish until he gets to the Q&A. He didn't have the Q&A this time around. Remember, the global economy is weakening much faster than most people expected. So the only question I would have is not what the Fed should do, but what will the Fed end up by doing? Because if it flip-flops, that's actually worse for stocks than if it's permitted and gets the inflation genie back into the bottle. So I think the uncertainty around the Fed is actually much higher than what's suggested by the discussion.
So you are more of a don't believe the Fed rather than don't fight the Fed at this point?
I am wait to see whether the Fed follows up. If he was serious at Jackson Hole, he would have extended his 8-minute speech, which is an unusually short speech, to do two other things. One, explain why to us they've made all these policy errors and how are they better at forecasting inflation. And second, point to a pathway for changing their framework. They still have a framework that is pro-inflationary. And until they change that framework, I think there's going to be a lot of people asking questions about their seriousness.
I get it, but why does the time of the speech matter? It's the substance of what he said, and he was as hawkish as we've ever heard him. And who cares about revisionist history, Mohammed? They made mistakes. They know they did, but that doesn't preclude them from making the right move this time just because they were, carelessly wrong, if you want to characterize it as that, on their outlook for inflation. He told you, he was direct. It's been followed up by Kashkari, who came out and said, we like the fact that the stock market went down. That's not good?
No, that's good about the present, but you have to deal with the past and the future. Remember, Fed communication is key. Forward policy guidance is essential. If you want to soft land an economy or softish landish or limit damage, people have to believe you. And until you own up to your mistakes, the ECB has owned up to its mistake. The Bank of England has owned up to its mistake. Secretary of the Treasury has done so. The Fed hasn't yet. They haven't explained why their inflation forecast. Every time they issue a quarterly forecast, people dismiss them almost immediately, Scott. So it is important to own and explain what you're doing better now.